All right, were you impressed with Draghi yesterday?
Oh, well, I think he's managed to do exactly what he set out to do, and he has been quite renowned for being able to talk down the euro, and I think yesterday was no different. Clearly, he has said that he is planning to expand the balance sheet back to March 2012 levels, give an actual number of around $1 trillion, and it's had the desired effect. The euro popped below that 124 marker against the US dollar. So, you know, while he may not have committed to full-scale QE, he has kept it on the table, and that is really what is helping to drive equity markets and, of course, the euro that bit lower.
And how excited should we be getting about this mini Jackson Hole, everyone's calling it? I mean, is it going to be a bit of a dance grip?
I think it's like the Woodstock of central bankers, isn't it, really? But I think in some respects, I think it's been fairly clear that the bankers have done, certainly here in the Eurozone, they feel that they've done what they can, and there seems to be a need for the governments in the individual member states to get their act together in terms of structural reforms, infrastructure investment. But certainly there'll be a good discussion there about the diverging monetary policies between the different central banks, and it'll be interesting really to see what sort of commitment we'll see from the ECB as to whether we'll get a little bit more clarity and when to expect full-scale bond purchases. But ultimately, there is a lot of talk around there at the moment about currency wars and the disinflation concerns, and of course I think that will form main part of the agenda amongst those bankers. Yeah,
and of course Yellen talks after the payrolls, right? What are your expectations on the payrolls? I mean, are we going to get anything new from Yellen?
Well, I'm reasonably bullish on the payrolls. I think we might actually exceed the consensus. I'm expecting maybe about 250,000 jobs to be added. I expect unemployment to remain around the 5.9%, but certainly a strong number could actually push Yellen to make greater commitments in terms of a date for a rate hike and the actual amount as well. And clearly the strong dollar is speculating. The speculation is there that the Fed will be the first ones to jump. But I still feel that she'd be a little bit reluctant to really commit to anything in the near term, because you still have to unwind a lot of that unprecedented QE that was done, and that's going to be a difficult thing to achieve.
When's this ruble slide going to end?
Well, that's a very good question. Now, certainly since the Russian central bank have decided not to get involved in terms of intervening, despite pumping about 30 billion into the FX markets last month, it does seem that it's going to be an organic pullback for the near term. But it is a lot of it down to dollar strength as well. But as long as we see falling oil prices and, I suppose, a lack of any sort of strength of the ruble, there doesn't seem to be much support for the ruble against the dollar in the near term.